Welcome to Gas Station Business 101 podcast. I am Shabbir Hossain, and this is episode number 57. This is the show where we discuss how to start, run, and grow a gas station business successfully. And I give you an inside look at many real-life case studies so you can follow and be successful in this business. Now, before we start, a couple of important announcements. One is first, let me apologize for not producing any episode for last about 3 weeks now. There were various reasons. One was that I was feeling a little bit under the weather, and then the new year and the holiday season and all of that. So everything combined, I'm late producing this episode, and I'm sorry and I apologize for that, and hopefully I will try to get better. Secondly, our new email server is working beautifully now. And I've been telling you for a long while now that we are working to transfer our email server from MailChimp to a new server, which is a paid server, but it does work wonderfully. And we were finally able to migrate from our old one to the new one. So the reason I'm mentioning this, because if you're on my mailing list, you should be receiving that 7 email series chain letters, not chain letters rather. It's really the 7 emails that I discuss how to start, run, and grow a gas station business. And I think in this series of emails, I go into very much details as far as how you can find a gas station, how you can tell if the station is making money, and how you can negotiate and how you can get into that business, either by buying or leasing. So this is an important series of emails for you to have as a note. So anytime you're looking at a business, you can refer back to those notes and see exactly what steps you need to be taken to find out if the business you're looking at is actually making money or not. These emails, I do highly recommend that you at least get those emails and keep it in a folder. You don't have to print them out. Just keep them in a folder. That way, anytime, maybe a year from now, you're looking to buy a gas station for the first time, you can always refer to those emails as your guidelines to tell how the business is doing. As I said, I've shared a lot of details in there, and I think those are very valuable for you in the event you are going to buy a business such as a gas station. So if you haven't signed up for my newsletter, you can do so by going to my website, which is gasstationbusiness101.com, and at the bottom you will see subscribe. And if you just hit that button, you will be able to subscribe and start receiving those 7 emails. And those of you that have subscribed, and for any reason, if you didn't get those emails, I want you to send me an email. You can do that from my site, or you can simply type Shabbir at gasstationbusiness101.com, which is my email address, and send me an email saying that you did not receive those emails. And lastly, if you haven't signed up, you know that I still have that free ebook as a gift to you for signing up for my newsletter. And that ebook is all about 9 passive ways to make money while you're doing your other businesses or other jobs. You can be at home and try some of these ideas that I've talked about in that book. And most of those I have tried myself, and I still do. And I make a little bit of money on the side. So I shared some of those ideas, and hopefully you can take some ideas to yourself and try it out and see if you can make money with that as well. So any of you that haven't received this free ebook, please email me, because I know in our last email server, we had that issue where you would subscribe, but you would not get anything to download for free. And we have resolved that issue. So one way to do it is if you sign up again, or you can send me an email and I will make sure you get that free ebook. Now, moving on to the show. As I said, I receive emails often from listeners and from other people that read my book, and they ask me, how do we calculate gas profit? how should we price our fuel. And since there are three different pricing on fuel, a lot of times it's easier for them to find out how much they're making on regular grade fuel, but how do they know what they're making on the plus or mid-grade and premium fuel, or diesel for that matter? Well, there are many ways you can calculate profit, but there is a simpler way that I practice, and I will share that with you. And I know when you listen to my show and look at those attachments that I'm attaching with the show notes here, because I think this is important for you to look at those screenshots and download that Microsoft Excel data entry sheet where you can use that in your business and calculate profit. But I know some of you will disagree that this is not a best or the best way to calculate profit. But for those of you that haven't started in this business, I think you should start off with something simpler, because let me back up. In stations that are very high volume, we calculate our mid-grade, premium, and diesel a little bit differently. But the one that I'm sharing with you is something that is very simple. And all you do is plug in your data, your sales price versus your cost, and it automatically will calculate your profit. But I think this is an easier way for you to get started. And once you get started, if you think you want to be more precise, then we can discuss that at a later show. But if you haven't listened to my other podcast episode where I talked about fuel pricing, I don't remember exactly the episode number, but I'm sure if you've listened to my show, you know there was an episode, I'm guessing about 20 episodes ago, where I talked only about fuel pricing, how to make money with fuel by pricing your fuel the right way, and how to be competitive at the same time. So since we're doing an episode on fuel profit, I think it's important for you to go back and listen to that show. And I'm sure the show title for that show was, or that episode rather, was how to calculate fuel profit margin. So go back and listen to that show. And then when you're listening to this show, I would strongly advise you to be in front of a computer, or at least get on your computer, go to my website, and go under episode 57, the show notes. You will get to see the screenshot. There are two screenshots that I will be adding to this show note. Both are vital for you to understand what I will be discussing here today. So either you can print them out and listen to my show and just glance through those screenshots, which this way it will make more sense to you. So the first screenshot that I attached here is a pricing data that comes from most of your fuel suppliers. Any jobber that you deal with, they will send you a pricing data every day, either via email or text message or however way you set it up. But I shared one where it comes through an email. So you get to see how they offer the pricing, which is they say 87 regular, the real cost without any taxes or anything. This is we call the rack price. So for instance, in this case, I believe this was a price about a couple of weeks ago. And always remember one thing when you're looking at this price, that let's say you have a Shell branded gas in New York City and I have a Shell branded gas station in Mobile, Alabama. Let's say we buy fuel same day. Let's say January 15th, you buy a load of fuel and I buy a load of fuel. And it's the same brand fuel, but that doesn't necessarily mean that my cost will exactly be the same as yours. Not even the rack price. The rack price can even vary area to area. So in this case, our rack price was $1.69 for 87 regular for that day. And for mid-grade, it was $1.84. And for premium, it was $2.20. Now, this is your rack price without any taxes or any other things like freight or jobber markup, any of that. So in our city, we average around 42 cents, depending on where you are. If you're outside the city limit, it's less by 2 pennies. If you're inside the city limit, it's roughly about 42 42 cents, but it varies because freight can go up and down. So we roughly add about 43 cents to our rack price to get the real cost. But in this case, this jobber also adds all the taxes and freight and tells you the delivered price. So in this case, if you're looking at the screenshot, you will see the delivered price for regular was $2.13. Mid-grade was $2.28. And premium was $2.65. That is the delivered price. Now, let's look at the difference between regular versus premium versus mid-grade. So we're paying $2.13 for regular unleaded, but we're paying $2.28 for mid-grade, right? So what is the difference here? Isn't it around 14 cents? Roughly, in our calculation, anytime whatever you pay for your regular fuel, it should be around 15 cents difference to your mid-grade fuel. So you will be paying around 15 more cents to buy the mid-grade than the regular. Now, as far as comparing regular to premium, again, let's look at regular price. Delivered price was $2.13, but our premium delivered price was $2.64. So there is a difference, roughly about 50 cents. And always remember, at least in our area, and I'm sure it's in your area as well, if you're buying it in US, that your regular to mid-grade will be about 15 cents. Your regular to premium should be around 50 cents difference. And it can go a penny up or down time to time, but the range will always be around 15 for mid-grade and 50 cents for premium. So the simpler way, remember I was telling you that there is a simpler way to price and calculate your profit. The way we do it is, let's say since our price was $2.13 and we like to keep it around 12, 13, 14 cents margin on regular, because there are credit card fees that are going to be taken off from that profit, right? So if I'm selling my regular unleaded at $2.25, when I bought it at $2.13, I'm keeping a 12 cents gross profit margin on my regular, right? But I'm not getting to take that 12 cents to my bank account. Why not? Because a lot of the people that are coming to our store are using credit cards, and there is a fee to using credit cards, and roughly that is around 1.75 to about 2%. So if you calculate that, it's taken off another about 4 pennies out of your 12 cents gross profit, depending on your fuel prices. If your fuel price is about $3, then that would take more, because 2% of $3 is higher than 2% of $2, right? So in this case, let's say our price is $2.25 and we're making 12 cents a gallon, but after somebody pays it with a credit card, we're only making about 8 to 9 cents a gallon. Well, that's fine. But the simple way we price our fuel, we roughly try to add at least 10 pennies or 10 cents to our regular cost, because that is where we need to be at least. But if the market can bear, then we will go up higher, because there are times when you can make 15, 20 cents a gallon on regular. And if the market can sustain that, then yes, we will go up. But I'm talking about an average market where you tend to stay competitive. That's when my goal is to stay around 10 pennies. So add 10 cents to the cost, and then add 50 cents to your mid-grade price compared to the regular. Remember, I'm not comparing cost of mid-grade and then selling price of mid-grade. To keep it simple, I'm gonna take the base number, which is regular fuel, and then I'm just gonna add 50 cents to the regular cost and say this is my selling price for mid-grade. And then I will add roughly about 95 cents to $1 for our premium price. Now, you may think that's too high, but let's talk about this. Why am I doing this? Because lately, in last few years, I've noticed where fuel prices have been very competitive. Anywhere you go, people are very competitive in their pricing. Everybody wants to get a chunk of the business. So everybody competes on regular price. When we look at a gas station, only thing we look at is how much their regular fuel price is. So there are times you have to give away your regular fuel and not make much money. But my idea is I will not give away my mid-grade or premium. So if I add 50 cents to my regular, and that's how I price my mid-grade, then I know that I am making at least 35 cents on my mid-grade, right? Because let's say my mid-grade, and if you're looking at my show notes, you will see that I said at one point the cost was $1.89 for regular and my selling price was $1.99, where I was making 10 cents. My mid-grade cost was $2.04. Remember, it's about 15 cents higher. And my mid-grade street price, means the selling price, was $2.39. So I was making 35 cents. And then my premium cost was $2.39, which is about 50 cents higher than the regular, which is normal. Anywhere you go, that is how much more you pay to buy premium. And of course, I'm adding my own profit, which is 50 cents. So I'm selling it for $2.89. To me, in branded gas station, if you're selling premium, you shouldn't give away premium fuel, because there are cars that are designed to run on premium, and that is where you need to make your money. No, you're not price gouging, you're not taking advantage of anything, because you're already losing money or not making much on regular, so there is no reason for you to give away your mid or premium grade fuel. So if you take the strategy like I do, where I may compete on regular fuel prices, but I will not compete on mid or premium, because if I'm carrying branded fuel, I know people have to have branded fuel and I need to stay in business and survive. So I will be doing this, and I've done it for years, where my premium fuel price profit margin is right around 50 cents and my mid-grade is 35 cents. Now, it has gone up higher because, as I said, when market can sustain, you can go up on your regular by, let's say, 15 or 18 cents profit margin. But remember this, if you can just slide up and down the scale with all three grades similarly, then you don't have to worry about how much money you're making on your premium versus regular versus mid-grade. Let's say today your street price is $1.99 and you see that you bought it for $1.89, so you're making 10 cents a gallon. But a few days later, you notice that your competitors are going up to $2.05 or $2.09, and you see a chance for you to make some money. Or you will see that you're still staying at $1.99 and nobody has gone up, but your cost has gone down to $1.79, which happens more often. So if that's the case, and you got a new load of fuel just in, then in this new load, you're making 20 cents a gallon. So if you see some of your competitors are going to $1.95, don't jump and try to match them. Instead, stay there. But in this scenario, you're making 20 cents a gallon on regular. And similarly, remember that your mid-grade, instead of making 35 cents, you're making 45 cents. And similarly, on your premium, instead of 50, you're making 60 cents. But my suggestion is, whenever you adjust your pricing, if you're going up, means let's say your cost was $1.89 and you were selling it at $1.99, and 3 days later, all of a sudden, your cost came to $1.99. Then what will you do? Sell it at $1.99 and not make any money, instead lose money every time people use their credit card? I don't think so. You need to go up. So when you go up, always make sure don't just go up on regular and not premium and plus. Always use the sliding scale for all three grades. For example, if you see that your cost became $1.99 and you're selling it at $1.99, then you need to go up to, let's say, $2.09, right? If you do that, add 10 cents to all other grades and go up accordingly. So if you were selling your regular for $1.99, you're going to $2.09, then you need to go up on your mid-grade from $2.39 to $2.49 and your premium from $2.89 to $2.99. This is how you can keep your margin at a steady level. This is how I do it. But there are times when I would reduce my regular price. I may not necessarily reduce my premium or mid-grade price. Now, if there is a huge drop in price that I'm going down by 20 cents on my regular, yes, I will drop similarly on my mid and premium. But let's say I'm trying to match a competitor, and instead of selling it at 209, I'm going to 205. I will not drop my mid or premium, because if I do, I'm making less than 35 and 50 cents on my mid and premium accordingly. So in this case, I'm just trying to be competitive with my regular pricing, where I will be making only 5 cents a gallon, but at least I'm making the same amount of money that I was making with my mid and premium. This is how I do it. And now let's take a look at the Excel data entry sheet. If you have it in front of you, let's pull it up. Let's take a look at it. Okay, here is the Excel sheet, and I'm adding this same sheet. So under the download section, where you can go to resources, and all the way down, you will see fuel sales profit calculator. And in this instance, I'm sharing you some data with you from a store back in 2013. So the fuel prices may seem very high, as they were higher back then. So if you'll see that I simply every day enter data for regular fuel, mid-grade, super, and then total gallon. So all I do is enter how much gallons we've sold that day. If you're looking at it, you will see, for example, March 1st, we did 637 gallons of regular, 33 gallons of mid-grade, and almost 6 gallons on super. And then it automatically adds the total gallon, and the total gallon is 676.64. But remember, this example is not a very ideal one, but it gives you the details on how it's done. The reason I'm saying it's not an ideal one, because the volumes are very low in this store. And this is one of those stores, it's a country store where they sell a lot of merchandise, but very little fuel. And it is an unbranded store. That's why you see very little sales on premium or mid-grade. But reversely, if you had a branded gas station, Shell, Chevron, Exxon, whatever brand that you carry, you will see a significant number on premium and mid-grade, because branded stations tend to sell a lot more of those type of fuel than non-branded stores. But this data profit calculator sheet is for you to use, and all you have to do is wipe out the regular, mid, and super, but do not delete the total gallonage, because that's a formula. So all you do is delete the regular, mid, and super and enter data, and it will automatically calculate the total gallonage. But let's move on. You will see the next column is delivery. So every time you get a delivery, I'm sure your cost will go up or down. And that way you will have to adjust your pricing and your cost in this profit calculator. So let's take a look at cost for regular per gallon. The first of March, the first day, the selling price was the cost was $3.40, and our selling price was $3.49. So regular margin was 9 cents for those days, until we received a delivery on the 6th of the month, where there was 5,200 gallons were delivered. And let's take a look the difference. Remember, the first 5 days, we were selling it for $3.40 a gallon, and we were selling it, our cost was $3.40 a gallon, and we were selling it for $3.49. So our margin was at 9 cents. Now, when on the 6th, the fuel load came in, the cost went down to $3.24, and we stayed at $3.49. So all of a sudden, our margin jumped to 25 cents a gallon. Remember, I just spoke about this, that when you get a fuel delivery, and if that delivery costs less, you don't go and adjust your pricing right away, because we don't do that a lot of times. And that's when you make quite a bit of money. But if you look downwards, you will see that we did have to adjust our pricing. So I think the gasoline, the delivery came on the 6th, but on the 7th, we went down to $3.44. So our margin came to 20 cents a gallon on regular. And then few days later, 2 days later, we went to $3.39. So we dropped by 10 cents and our profit came to only 15 cents a gallon on regular. So you see that whenever you get a delivery, you look at the cost and that's what you enter. So you always get an accurate picture of how much money you're making on your regular. So similarly, now let's look at our cost versus price on mid-grade. Remember, our mid-grade always costs 15 cents more than the regular, right? So in this case, you will see that our cost for mid-grade for that day was $3.55, which is 15 cents higher. And then our price for mid-grade was $3.85. So our mid-grade profit was 30 cents, not 35 cents, like I like to keep. For some odd reasons, it was around 30 cents, which is not bad, but still. And then when the next fuel load came in on the 6th, our fuel for mid-grade profit margin jumped to 46 cents because our cost went down to $3.39 and our selling price was at $3.80. So we were making 46 cents and then we went down to making 41 cents and then to 36 cents and so on and so forth. And let's look at the cost and pricing of premium now. On the first day of March, we were buying premium for $3.90 and we were selling it at $4.39. So our profit margin was right at 49 cents, which is right around 50. And then when fuel load came in, as we all know that the price has gone down by then, so our profit jumped to 65 cents. And then slowly it came down to 55 cents and so on and so forth. So when you download this data, profit sales data sheet or the calculator rather, all you have to do is plug in these numbers. So every day you just plug in numbers like how many gallons of regular you sold versus how much mid-grade and how much super. And then if you want to keep tally of your dollar figure, then you can enter that as well. And then also you need to enter how much cost of your regular is, what's the cost of your mid-grade and premium. Because remember, it's very simple to enter that cost by either looking at your price sheet that you get from your jobber and just enter that cost, or you can look at your actual invoice that you get from your jobber. And both should be pretty similar. So all you have to do is enter that data and continue copy paste that data until you get a new fuel load. And once you get a new fuel load, you need to see if the price has gone up or down, and however way it has gone, you need to adjust your cost accordingly. And every day you need to enter your selling price, and rest of it will be calculated automatically because I put that formula in there. So at the end, if you look at the end of the month where I average my whole fuel profit for regular, for mid-grade, and for premium. So for this case in this store, we averaged 11 cents a gallon on regular fuel because there are days where we made only 4 cents a gallon. And that happens often because there are times when the price has gone up, but you couldn't go up because your competitors haven't moved. And that happens, as I said, time to time. So there will be time in a month where a couple of days or few days you didn't make much money. But then again, when the price drops, you make up for that difference. So as you see, even though we made 4 cents in some days, we really averaged 11 cents overall for that month. And if you look at on the right-hand side, you will see that our average profit margin for mid-grade was 32 cents. So it didn't end up being 35, but stayed close, which is 32 cents. And as far as our premium goes, for that month of March, we averaged right around 51 cents. See, last 6 days of that month, we were making only 44 cents a gallon on premium. But if the price hasn't gone up in that end of the month, we would have averaged another 5 or 6 pennies on every one of these grades. So for example, instead of making 51 cents a gallon of premium, we would have averaged around 57 cents a gallon. But still, 51 is not bad. So this is how we calculate profit on plus, regular, and premium. And at the bottom, you will see in red letters, I calculated the total dollar profit for each grade. For example, what we did is we took the total gallons sold on regular, which was 16,412, and then we multiplied it with our profit margin, which is 11 cents for that month, and it comes out to $1,849.15. For plus, we did the same thing. We took the gallonage and multiplied it with 32 cents, which was our average profit for that month. So we made $198. Similarly, on super, we took the gallonage and multiplied it with our average profit of 51 cents a gallon and came up with $239.64. So total fuel profit for that month for this store, which doesn't sell much fuel at all, we made $2,286.97, which is not bad for this type of stores because these stores do not rely on their fuel sales to survive. It's just an added thing to have for people to get their fuel while they're buying their beer, their cigarette, their food, and everything else. But in a branded store, this number could be $10,000, $12,000, $14,000, $15,000 a month. And I will share in a next episode, hopefully, or the following one. Remember, last year, I discussed a store that I helped one of my clients buy where I shared some P&Ls for that store from the day they bought the store and previously, and then 3 months later, how much they were doing. And I recently received some more sales data, and I've created some P&Ls. I will be sharing that store's new profit margin and new income and income statement, hopefully in next couple of weeks, where you will see the growth of that store based on the marketing effort and the pricing strategy they have implemented in that store. So let's wait for that. But in the meantime, if you are in gas business, I highly recommend you go to my site and download this fuel sales profit calculator and just play with it. Just plug in some data, some numbers, and see how they calculate profit for you. So let's now recap. I know if you are not looking at any of these data price calculator or the fuel pricing, daily fuel pricing, then you might be thinking, what is he talking about? Because none of these made any sense. So I want you to look at those two things to make sense of what I'm talking about here. So to recap, remember to look at your price sheet every day. That way, at least 5 days a week, because the price can go up or down Monday through Friday. Doesn't mean you need to jump your price up and down similarly every day. No, you're not, because you're not buying fuel every day. You may be buying fuel every 3 days or 4 days. So it is important for you to keep up with your cost versus selling price. And always remember, your regular cost versus mid-grade should be about 15 cents higher at cost level and about 50 cents higher from regular to premium cost. So you need to price your fuel accordingly. And always remember, you need to compete on regular fuel only and not on mid or premium. People that compete on mid or premium is a bad idea because you're just throwing away money. Remember, people that are price conscious, they always buy regular, and that's the price they will be looking at. They're not looking at your premium price. And most of the newer price signs do not even put their mid or premium price or display their mid or premium price on their fuel price sign. So you need to make sure that you're making at least 30 to 35 cents on your mid-grade and about 45 to 50 cents minimum on your premium. This is the way you can sustain and survive in this competitive business. If you have any question regarding this episode or any other episode for that matter, you can always email me at shabbir@gasstationbusiness101.com, or you can post a question on our Facebook group. by going to shabbirhossain.net, which is a domain redirect that will take you directly to our Facebook group. Don't forget to sign up for my very important newsletter. As I told you, I am in the process of sending some very valuable information, and it's all free. I'm not trying to sell you anything, and I promise I will not try to sell you anything. So it is for your benefit, and all you have to do is go to my blog site, which is gasstationbusiness101.com, and scroll down to the bottom where you see subscribe button. Or you can just simply type gasstationbusiness101.com/subscribe. In the meantime, if you haven't subscribed to the podcast, not my newsletter, but podcast, feel free to do so. This way, you're never late. Anytime I publish a show, it will be in your inbox. They will notify you. iTunes will notify you. So if you are using iPhone, you can always go to iTunes and subscribe to my show. And if you are an Android user, you can always use iTunes or TuneIn Radio or Stitcher Radio and subscribe there. That way you will have it right away. And I'm attaching a link to my iTunes page. So in the event, if you find in your heart that you need to give me a good review for this episode or for any other episodes for this podcast, you can do so by following that link and getting onto iTunes and say a few words. And that would mean a lot to me, of course. Thank you once again for joining me in this episode, and I will see you in the next one. Take care.